On the last trading day, we found two unusual trades, one of which was worth $36 million on Coinbase stock, ticker symbol COIN. And so in this video, we will analyze this unusual option activity to find out how wealthy investors are trading Coinbase stock. Are they bullish and buying or bearish and selling, so that we can also trade in the same direction to make money while the rich are getting richer on Wall Street? Because as we all know, the rich have more access to information, including leaked insider information, to make better financial decisions. No wonder the rich get richer. So without further ado, let's dive into the data as usual. As we can see here on the options time and sales tape, 15,000 contracts were being traded at the same time for the September 20 options at the 210 strike calls, October 18 options at the 195 strike calls. So let's take a deeper look at the option chain to find out what this wealthy investor is doing exactly. So at the October 18 options, we can see the 195 strike calls, there was only an open interest of 559, which is much less than the 15,000 that were being traded at the volume. And so we know that these were opening trades. And when we take a look at the September 20 options, we can see that at the 210 strike calls, there was an open interest of 30,000. And so that's much greater than the 15,000 that was being traded. So these could be closing trades. And based on our analysis, that's what they were. And so if these September 20 options were closing trades, essentially they were rolling their contracts to this new trade here, opening up this trade for the October 18th, rolling to a further date, but lowering their strike prices. Okay. And so what is the cost of this trade that they opened? The price that they paid, 24. We multiply by 100 since each option represents 100 shares of stock. So each of these call options costs $2,400. And since there was a total of 15,000 contracts, we multiply that out and we get a total of $36 million. And so when we analyze these call options for the October 18 options at the 195 strike calls for 24 that we had just analyzed, you can see here on the risk profile that these call options are clearly going long bullish. You can see the share price on the x-axis here and the profit loss on the y-axis. Note the zero break-even line over here, and anything below that is a loss. So as the share price of Coinbase goes down, it becomes a loss, negative. If it goes up, it becomes a gain. And so that's how we can see that this is a long bullish trade. We can also confirm this by taking a look at the Greeks. The delta is a positive delta. Now you can also see that we are also in this same position right over here at the 195 strike calls. POS stands for position. Green means buying. We are in the same position and we use position sizing to manage our risk. Now, just because we are trading this, that does not mean that this is a higher probability of profit trade. Nor does being a $36 million trade automatically make it a high probability of profit trade. And so you may be wondering, why is this not a high probability of profit trade? Well, because we actually analyze more data behind the scenes to find out the probability of profit on these unusual trades. Not like other websites and scanners that analyze very limited data sets. So, for example, for the September 20 options, if we take a look at those 210 strike calls, notice the price that they are currently trading for now. About $1,300 each. Those 30,000 contracts that were opened. And if you take a look at when these trades were made, which is what we do, we found that on August 2nd, okay, the trading day for August 2nd, when Coinbase was trading at 212, those September 20 options were being bought. And they opened them at the 210 strike calls. You can see 17,000 volume, clearly opening trades since the open interest was only 1,125. And they were buying them for about 2,500, which means they lost 50% since they are worth 1,300 now. So we know that this wealthy investor lost money. So that lowers our probability of profit on this trade, even though this was a $36 million trade. So we need to keep that in mind and track these wealthy investors, because some of them could be wrong. They're not always going to be right. And that's why we diversify our portfolio with this type of higher quality stock picks based on stronger data that we share with our membership. Now, to give you an example of our membership, we actually traded Coinbase back on February 20th. On this day, you can see that we shared Coinbase with our membership in this video, a $30 million trade, which was higher probability of profit. And this trade, you can see on February 18, we posted this video for our members only, analyzing Coinbase, and we told our members we were going to go long bullish on Coinbase based on our analysis of unusual trades happening. And so if you got in, you can see that it started to go up much higher. In fact, this was the day, March 8th, that we took profits and closed out. This was the trade on March 8th over here that we shared with our members only at the gold level, where we showed that we took profits at 292% profit with our trading strategy. And what's very interesting about our entry is that you can see that Coinbase recently bounced up from this price level, which was actually our entry back in February. So if you had access to our membership and got in on Coinbase back on February, you would still have been higher. It never really stayed below this level. So this is the value of our membership, where we share higher probability of profit trades with stronger data. And letting our members know, specifically our gold members, when we close out to take profits based on our data analysis. So if you want access to higher probability of profit trades, we'll put a link at the top here where you can gain access to better trades than this one here. Now, there was a second trade on Coinbase that happened in the last hour of the market. So that was another very unusual trade. Okay, and what was that trade? Well, if we take a look at the option time and sales tape again, you can see here towards the last hour at 3:13, 3:26, you can see these November 15 options at the 250 strike calls, 350 strike calls being traded, a spread. Okay, and if we calculate the total trade cost, you can see $14.96 and $3.31, because they bought the 250 and they sold the 350. So we subtract the 331 and we get a cost of the trade of $1,165. So less than the first unusual trade. And notice that there were more of these contracts being traded. If we scroll down some more, you can see more of these trades happening at the last hour. 3 326, 313, 336. And so this trade, when we analyze it for the November 15 options, we can see here at the 250 strike calls, the open interest was only 900. And also at the 350 strike, 400. And since there was a total of 5,000 contracts being traded, which is much greater than the open interest, we know these were opening trades. So we also got into this trade as well. You can see our position here, where we were buying these 250s and selling the 350s. And we use position sizing to manage our risk, because this is still a higher risk trade in comparison to the trades that we share on our website, where they were buying the 250s and selling the 350s for 165 as we had just calculated. And so when we analyze this trade, we can see that this is a vertical call spread strategy where they are also going long bullish. As the share price goes up, you can see that this trade gains in profits. If it goes down, it becomes a negative loss. And we can see from the Greeks that this is clearly a bullish long trade because the delta is a positive. But keep in mind, the risk on this trade, a very negative theta. So time will decay this trade. And that is why the purple line starts to drop down to the blue line, which represents the expiration, November 15, while the purple line represents the current date. So it drops down below this 0, which becomes a negative loss. But because the reward, which shows on the blue line at expiration for max profit, you can see here, is 8,835. Our risk to reward is very much in our favor here. So 8,835, the reward, divided by the risk of 1,165, we can see the risk to reward ratio of 7.58, which means we could potentially make 758% profit on this trade if Coinbase rallies up. So that is why we still took this trade, even though it is higher risk in comparison to the trades that we share on our website. We just use position sizing to manage our risk, and we put most of our capital into trading the stocks that we share with our membership. And so if you want access to those higher probability of profit trades, make sure to go to our website. We'll put a link at the top here. Let us know in the comments below, what do you think will happen to Coinbase? Do you think it will rally back up, or will it crash down lower? As usual, please smash the like button, subscribe if you haven't. Take care and have a wonderful day.